Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 144 for December 29th, 2020. My name is David Kosmeter. I'm the creator of TimingResearch.com, and thank you for joining us for the last Timing Research event of 2020. So we have a lot of stuff planned for next year, but we're going to close out the year with Doc Severson of ReadySet.trade. He's been a guest on many other Timing Research events, was actually officially the first ever guest on any Timing Research event when I started this back in 2014. And so he's going to share his screen and talk about some the markets and some symbols today. And the option professor is back to moderate, so I'm going to go ahead and turn it over to him.
Okay, thanks a lot, David, and welcome everybody to the show. A lot of stuff going on here in the last week or so, and a lot of news coming out here on that stimulus today. So basically, we're at the end of the year, and a lot of people are looking for a lot of different things to happen. So we're going to get a viewpoint here from Doc Severson. And Doc, a little background on yourself before we get started for the people who are not aware, and some of the stuff that you're doing at ReadySet.trade and ReadySetCrypto.com.
Super. Hey, Jim, how you doing?
Good.
Hopefully you can see the first slide that I've got up here. Not everybody knows who I am, so I thought I'd just take 2 seconds here. Current services that I have are ReadySet.trade and ReadySetCrypto.com. So you might have heard my name before at Options MD or TheoTrade or some of my older services like Doc's Trading Tools and the old Options Linebacker. So my specialties are analyzing price in multiple time frames, what I call fractal price analysis. And so I trade in options and future strategies. And out of necessity, I've had to learn about trading mindset, neurolinguistic programming, try to fix my own brain before I can effectively profit. And what I like to do is, I was a former engineer, so I like to take things that are very complex and try to make them as simple as possible. And this really was illustrated in my books. This is my most recent one, which is Fractal Energy Trading. And that's available on Amazon, as is Hacking the Holy Grail. Hacking the Holy Grail is more about the mental mindset side of trading. Again, both of those are available in paperback and or Kindle format on Amazon. And with that, everybody knows who I am. So away we go, Jim.
Okay, let's jump right in. We're going to go right into the semiconductor space, which has obviously been red hot since the bottom in March. And one of the leaders obviously is AMD. They benefited quite a bit from some goof ups by Intel. But at these levels here, what's your view on AMD?
Well, what I like to do is, as you can see, I'm doing this on a monthly, weekly, and daily basis. So again, here's the monthly, weekly, and daily chart. So these are all separated by a factor of 5. So basically the weekly chart fits within the monthly chart, factor of 5, daily fits within the weekly chart, factor of 5. So you can think of these as, like parent time frames down to a child time frame. And so what I like to do is look at these from a trend and energy perspective. Now, what I have down here at the bottom is what I call the fractal energy study. For those of you that are looking for this study, it doesn't exist. It is the Choppiness Index, which is currently not available on Thinkorswim. If you guys need this, you can always reach out to me. I'll give it to you for nada, right? For gratis. So again, Choppiness Index, what it does is it illustrates basically the linearity of the current move. Because like what we all do, and this is the long-winded way of getting to AMD, but once I get past this, we'll go through a lot faster. So if you're going to run up the side of a mountain, you're going to run as far as you can, and then you're going to consolidate. You're going to rest. And markets typically do that through some type of consolidation or flag pattern, things like that. And then you're going to get it going again in the direction of the trend, and you're going to rest. So from range expansion goes to range contraction, then it just keeps on repeating. So what I'm looking for on this one is, on every time frame, what kind of trend do we have? And obviously the trend on the monthly chart is to the upside. That's extremely powerful and does not change that often. What do we see on the weekly chart? Same thing, trend to the upside. Even on the daily chart, we see a trend to the upside. We don't see a reversal on the price yet. Now what I'm looking for in the bottom study is the potential. You can almost look at this as a fuel gauge, like full or empty. So when something is completely empty, this is where we get into an exhaustion condition. This is where I'm anticipating the market going sideways, which of course we could use through something like a calendar spread or iron condor when it gets to that point. But when it gets up to here, we're looking for an explosion. So we're looking to take a breakout or some type of directional trade or some kind of long gamma trade like an iron condor. So with this right now, what I'm seeing is we have a lot of potential energy across the board here, but it's failing to break out. And that's kind of what I'm seeing across the larger market too, because we've been in a high energy condition across the larger market for a number of weeks now. It's been unable to break out. And it's almost like a pressure cooker. If it can't break out to the upside, this is why I've got a little bit of a concern for a third move through to the downside, maybe into the end of the year, maybe the beginning of next year. So that is on the table right now. If it can't break out to the upside, if we don't have enough buyers, if we can't squeeze enough shorts to the upside, then it's going to have to move to the downside. So for this one, if it's going to move to the downside, probably it's just going to retest the breakout level of 86.5 again. And I would look for some type of reaction at that point. So again, AMD looks good. And obviously we have earnings coming up right now. But like the rest of the market, I have some concern that it's not breaking out at this point and just like blowing away Intel.
When are earnings coming out?
Oh, let's see. Down here it says earnings are coming out. This looks like the end of January.
Okay.
Normally it comes up and it highlights that, but it looks like, oh, there we go. 126, January 26. So we got about a month to go.
I'm going to ask some questions as we go along because I'm sure the people would have questions as well. So let me, the middle box that I guess that is a weekly.
Yes.
If you have in the bottom fractal energy area, if you have a big high point and then you go up and make another high point higher than that, but your fractional energy does not, is that called a divergence? And could that be an indicator of exhaustion?
Okay, so are you talking about this?
Yeah, I'm talking about the middle chart, and you have a high point, and then you've got a high fractional reading, and then you have a pullback, which you saw, and then another run-up that makes a new high, but your fractional energy doesn't seem to be making a new high.
Well, this just represents potential energy, not necessarily kinetic energy. So this one sat there. For anybody trading AMD over the spring and the summer, this thing was just nuts. This is just winding and winding and winding up. And so we had a massive, massive power spike here at this point. The potential, so look at all these false breakouts that happened up here, false breakouts after false breakouts. So typically when we have something like that, when it does break out, nobody takes this one because they're like, this is just going to be another false breakout, and off it goes, right? So we had a huge energy spike at this point. Now, what you're saying here is that on this one, and actually this one here this is a normally very high level. So this one is just freakishly high. So I don't view that as a divergence. Anything above the level of 55 has got enough energy to power the next trend.
Okay.
So to me, there's no divergence. There's no like lack of energy powering this one.
Yeah, because there was a couple things that hit the newswire that I thought was interesting. One is Thomas Petrie from Interactive Brokers was on TV, and he said that this is the first time that his firm's clients are net short this week. And John Najarian was saying that there was a significant spike up in put activity on the QQQ. Obviously, AMD and semis would be in there probably. Yep. And so I'm just trying to see if there's any evidence why these people would be getting, so concerned about a decline. And is there any evidence that a decline might be in the offing?
Well, if we start to break down through these lows, now the one thing, I'm not showing this on this chart, but I can actually take this one all the way up to a 4 level. So I can take 4 time frames on here and look for the 78-minute chart, which is 5 times faster. Let's get on AMD here. But if we look at AMD, what we're looking for in this case is what I call rule number 2, reversals start from the inside out. So they start from the smallest time frames and they propagate higher. So what we'd be looking for is If we undercut 89, then this might be AMD starting to break down. And again, like I said, it should hold at about 85, 86 or so, which is the top of the breakout from the last one. But if it doesn't hold, then this one is starting to collapse under its own weight.
Yeah. Yeah, I mean, this put activity and Petrie coming on TV for whatever reason, telling the public what his clients are doing. I didn't even understand why he would be doing that. But that's interesting because it could be resolved either by those people are all wrong and they squeeze them hard, or maybe they're onto something. So it's interesting information, but it could go either way.
A lot of uncertainty out there. A lot of this is Congress is driving this. There's a lot of undercurrents that are out there that are happening right now.
And that January 5th runoff, if it goes one way or the other, it could obviously be a binary event.
Could be. I've been talking about the three things that have to happen, three things lately that have to happen, one of which is the vaccine. There can't be any issues with the vaccine. If there's any issues with the rollout of the vaccine or any untoward side effects that we find, uncertainty is going to hit the tape like a lightning bolt.
Yeah.
And obviously the runoff as well too.
Yeah. All right. Well, that's where we are on AMD. And, it might not be bad to kind of stick with the sector because some of these stocks are in the same sector. So let's go over to Cisco, the next one, and see how that's looking. And then we can go over to NVIDIA and Micron Technology.
The thing that stuck me out, like right now, if you just look at this doesn't look like that great of a chart. We have an obvious weekly downtrend in play here. We have lower highs and lower lows, although we have a higher low here. And we also have the beginnings of what could be an inverted head and shoulders. So this is more of just classic chart pattern kind of work, left shoulder, head pattern, right shoulder here. The upside target would be the measured move from about 50 down to 32. So what is that? That is 18. So if we extrapolate $18 from there, whatever that ends up being, this actually could be an important move here. This also goes to rule number 3 that I talk about is descending patterns. Descending patterns like this will eventually, at some point, break to the upside. It's physics, right? Just like descending patterns break to the downside. So this one, I'm not going to look at this one on a fractal basis that much, although we do have exhaustion on the weekly chart to the upside. We've had several weeks in a row to the upside, and this one is now approaching exhaustion. So what I would expect to see here, and we do have earnings coming up, and I could look at the date in that in a minute. I would expect to see this thing consolidate or flag out just underneath this trend line for a little period of time. And then some event, some kind of catalyst should propel this thing or could propel this thing above that trend line. That's what I would look for on this because there's certainly enough energy here. Here's the problem though. That to me is this thing is cooked to the upside.
And it also is more of a value play. So as value gets going, probably this would be more of that, huh?
Yeah, I'd say so. That's so we have earnings that look to be like in the first week or so of February. So they're quite a ways out.
Yeah,
the market, Cisco shouldn't be on pause right now, just waiting on earnings.
No.
So it's more of just the uncertainty of today's underlying right now.
Yep. Next one up in that sector is NVIDIA, which has been a real high flyer this year.
Yeah, this is a super pattern right now. This is a super pattern. We have the weekly chart has been coiling up for a number of weeks. This is almost like that spring effect that I've been talking about, where it's just winding. Now watch for this. So as this, kind of goes into the vectors into the apex of this triangle, you're going to see this go higher and higher. And we just have, across the board, all kinds of potential energy. If it cannot break out, then it must go down. So I see this so many times where it's like everybody just assumes that it's going to break the triangle to the upside. But the problem is maybe a larger time frame is just not ready to go yet. Dad, in this case, is still sleeping. So in that case, the price falls out of bed and then normally will slingshot like that. So just when everybody gets bearish, this thing hits some type of support level where there's buried demand in here and it just takes off. So this one, again, is one of those that should break to the upside fairly soon. But if it can't break to the upside, then I would expect to see. So in a case like this, where I'm not really convinced it's going to go one way or the other, this is where I typically will set up something like a long iron condor. Some people can do straddles. I mean, if the implied volatility is low enough, you can play a straddle on this, but typically
I doubtful in this instance the implied volatility is low, huh?
yeah, I doubt it. I have very low luck with straddles, so typically iron condors do really well with that. Long iron condors. Let me make sure
yeah, not short. I'm not writing them. With regards to Micron Technology, MU.
Down here we go. Okay. Again, this one looks really good. I like this. I like the fact that we've had this, you know, you can see this pattern here is just a big monthly pattern, actually. So that's very powerful that it's breaking out of a monthly pattern. And right now it's just going into a little weekly exhaustion. I would expect to see this flag continue for a little bit longer. You can see the daily chart's ready to go. The daily chart is totally, from an energy perspective, is totally full, which means that it's got to go somewhere. So a lot of times you'll see this thing actually coming back down. Everybody looks for the breakout from this, but it may come down first. So again, this is another condition where a long condor would probably be the right application for this. We're also looking at earnings coming up fairly soon here.
Yeah, the big spike in the puts on the QQQ that Nigerian was talking about. Obviously, these people in the stock have got tremendous gains, and with the binary event that could occur with this January 5th election, why not throw a little bit of chump change on a put just in case everything does melt down?
Yeah, you know, something that
you can afford it. You know,
something that was taught to me a long time ago is just because you see a lot of activity either with puts or calls on a certain strike doesn't necessarily mean what people attach the value to it as, because like you say, they could just be hedging. I mean, there's nothing bearish about hedging, right? It's just that you're trying to lock in any particular, you're buying insurance for that matter. So
yeah, I mean, they're figuring if it takes off through the roof, they're still in the stock, and if it comes back over, they have protected some of their gains. They take a profit on the put and stay with the game.
Right, and this is the time to be buying puts with a relative low in implied volatility. It's not real low, but it's a relative low.
Yeah, in this day and age, 20 is a low number, right? Next one we're going over to is the vaccine guys, Moderna, mRNA. It had a decent day today, and hasn't been around all that long, doesn't look like it.
Yeah, so this is one of the candidates for, this is one of the 3 vendors for the vaccine. Is that correct?
Yeah, I think so.
Yeah. I don't play that much in the fundamentals. I mean, it's like, I don't really, I originally started doing that. You know, I would scan for fundamentals and do all that stuff. And I've just sort of lost interest in, and especially ever since Bernanke started really putting the printing press to the fire. Yeah. It just does not make sense anymore. So this one, I'm a little surprised that it's just, this is a good visual for, you know, for every market that goes parabolic like this, you typically have what's called a hairy back to them. And this is a pretty hairy back that this one's got. But, you know, we'll see if it's filled some gaps now. Maybe you can start to build some support. It is showing potential exhaustion to the downside now. So this is a little bit overcooked, a little bit overdone. You can see that this move is still, from this expansion move, went into exhaustion down here. So a little bit of shake and bake would not do badly for this particular stock. So about, probably a good place to sell puts against this one.
Right. What about the IBB, which is a more diversified way of trying to play this game?
Yeah, if you can afford it. Yeah.
Yeah. Well,
it's a cleaner chart, that's for sure.
Yeah. I mean, if you're going to play that game, this seems to be the more stable way of doing it.
Yeah, I would agree. And the energies actually look this. So that's a real clean chart. You can see also that big breakout on the monthly chart, big monthly pattern that went on for years, from 2014 all the way through here, almost an ascending triangle that's breaking out. So this one still looks really, really positive. And maybe a retest of that 145 breakout level would be very healthy for this one, allow this one to build up. So that would be somewhere around in that area down there.
Okay, next one up is a payment guy, the Visa V, and they're kind of old school compared to Square and PayPal, but old school seems to be working pretty good here.
Well, I talk about, and again, I'll slip into chart patterns from time to time, but they just kind of draw my eye to this series of higher lows that are going along here. So a big ascending triangle with a pant load of energy here.
Oh, yeah.
That this one is ready to pop. We have earnings coming out. Let's see, earnings will probably be in January, I think. And it's hard for me to believe the market's, 125. So this one, I think is just waiting on certainty to come back to the market right now. It's been consolidating like crazy when this thing gets up and moving. But this is anything but a bearish pattern right now. This is an extremely bullish pattern. Once this thing gets going, and it may have a couple of fits and starts to get going over 220 or so, this one should be massive once it's rolling.
Yeah, because consumer spending and the activity on Visa cards is supposed to really get high. So,
right, and the margin that they have on their credit cards is just outrageous right now.
well, here's one that I think everybody wants to know what's going to happen next. Silver, SLV. A lot of people are thinking, silver used to be at 50 when the gold was at 1900 last time. Now it's in the $24 area. Is it got the potential to play catch up into 35 or 45 next year if gold breaks 2000? What are you thinking?
Well, all of this is telling me that we're in good shape. The only thing that I'm a little concerned by is that we've had such a strong monthly pattern that we may have gotten a little ahead of ourselves.
Right.
When this thing, but 2010 proved that this can go, insane. So from a classic price perspective, a classic Dow theory perspective, we now have higher low, higher high reversal on the weekly chart. And on the daily chart, if we just kind of zoom in on this guy, again, the same kind of thing, very gappy, but typical SLV. So this could stand from flagging out just for another week or so at this level, because it's almost in exhaustion right now from this breakout to the upside. So from coming from a relative low all the way above this previous high, that's taken a lot of energy out of this thing. So going from 20 up to 24 and change has taken a lot of energy out of this. I would anticipate a little bit of a flag here to set up, but a break above 25, I think once this thing builds up some energy, that's going to be a really nice move. And I think this will eventually turn into like a big cup with handle pattern like that.
Yeah, because the chorus of a weaker dollar because of all the printing is very loud, and technically it's looks pretty sound as well. So obviously,
gold and silver just have a way of like taking everybody's linear logic and just twisting it on its ear. I mean, it's just amazing how, the price truly does whatever it wants to do. And the very second that people look away from it is when it breaks.
Yeah, exactly. Yeah. It's, they always say, don't wait to buy the gold, buy the gold and wait,
Yeah, that's good.
General Motors, GM, it's come off the canvas here, but now it's come back down a bit, but it had a nice little breakout above 30, 35. And what are you thinking now?
Well, what I think is if you look over the last 10 years, this is like one of the worst looking charts you'll ever see. So you can't take the macro on this. All you can do with GM is just look at a very short time window, because this thing is just guaranteed to disappoint over the long term. So I would look at this as like just a trading candidate. So if you're a pullback buyer, this might be a nice pullback here. The problem that I have with that right now is that the weekly chart is still kind of out of gas right now. No pun intended with GM, but what I would expect for this one is just kind of chop around for a while. This might be a good short Condor candidate, actually, especially with implied volatility peaking up just a little bit here. So I would anticipate this would be range bound for quite a while yet to earn the right after this pretty strong break here. But again, if you look at this on the monthly chart, this is not something you want to own for a long period of time. Although, you never know. I mean, if they're able to get into EVs in a strong way, if they're able to do some, that thing with Nikola failed, unfortunately, but if they're able to find somebody else that helps spur demand and gets them into electric vehicles, this might be a good thing.
Okay, the next one I'm not familiar with. It's Iron Mountain, IRM. It's a information management services company, and it's headquartered in Boston.
Myself as well. I'm not, again, this is a pretty nasty looking chart over the last, few years here. This is a monthly downtrend, which is not good, but keep in mind that descending patterns break to the upside eventually. This is a higher low. And if it's able to break above this into a higher high, this could be a very powerful pattern because it's shown that it's kind of earned the right now. But it's difficult to look at this one with any kind of, here's a neckline for some type of pattern here. This is not really a classic inverted head and shoulders or anything. It's just there are some charts, Jim, that I look at and I just refuse to trade. And this would be one of them. Like, I just don't see any linearity behind the price action. I don't see any like classic dance between the buyers and sellers that give us the chart patterns and the sawtooth wave behavior.
I think the attendee who put this up is looking at maybe some things like there's short interest of 17% of the stock, so that's heavy short interest. And he's looking at the 50 days at around 27, the 200 days at 26 and change, so they've inverted to the upside. And it has a dividend yield, it looks like, at over 8%. So that sounds like the trifecta of why it might be able to go up if it got moving, but it looks like that 30 area would really be an important area to overcome, because didn't you have like lows there and highs there kind of intersecting at around 30?
This is one of those charts, Jim, that you can see whatever you want to on this.
I got you.
So like if you have a cognitive bias that you want to be short, you can look at this chart and find reasoning to be short. Or if you have a long bias, you can do the same. To me, this is a chart that's just a mess. And investors can't figure out what to do with this. So I like to trade stuff with a little bit more linearity than this.
That's a heck of a lot of shorts, though. 17% of the stock, huh? That's pretty short. That's pretty high short interest. So somebody is doing something with it on the short side. Anyway, let's go and move to something that everyone might be more familiar with, which is HSIC.
Now, this one's really interesting, again, because what we're seeing is this had a very linear movement all the way up until, let's see, when was this? 2016. And since that point, this is actually somewhat bearish, believe it or not, because this is a broadening pattern. The volatility just is getting larger and larger. And actually, to be honest, the S&P is doing the same thing as well, too. So the volatility continues to expand in this, and this is to some degree a little bit bearish. You can see also that it's just refusing to break higher from here. So it just does not accumulate all that well. But great big triangle pattern. I mean, again, if you see a break above here, you'd have to go with that. But to me, this one is just very, very unstable. Again, probably not a chart that I would want to trade. The linearity just isn't there anymore. I like trading stuff like this. I like being, trading something like this makes you into a genius. Trading something like this makes you into a genius. Trading this stuff is very, very difficult. So I typically avoid stuff like that that's in huge chop at the monthly or weekly chart.
They deal in medical products. I know they do a lot of dental. And so I guess the person who's interested in this thinks because it's in the sector of healthcare or whatever, that it could have some legs to it. But as you were saying, it definitely is caught in kind of a window of 50 and 70 right now.
There's people that are really good at the fundamental side. I'm not one of them.
Yeah.
What I've just learned over time is that price is the ultimate arbiter. So you can come up with a logical construct for whatever you want to on the chart, but the chart ultimately will tell you via the price what the market thinks of that underlying. And right now, market is extremely confused about what to do with HSIC.
No doubt. And a good example of why you want to follow the price and not just the news. I mean, here's the next one, Disney, DIS. They've got all their parks closed. They can't come out with any real new movies, I guess. But they've done a few different things that make people excited. And the thing's gone from 120 to 180 in a very short time frame. And that's why you follow the price and not the news, right?
classic example of the market pricing in, forward discounting in 6 to 9 months from now.
Right. Perfect. Yeah.
Look at Disney, right? So, yeah, hard to be anything but bullish on this chart. The problem that I have with this right now is the weekly chart's a little ahead of itself. We've had some very strong weeks. I would want to see this coil below 180. I would want to see this set up in a very high and tight flag up here between 170 and 180 for the next 3 to 4 weeks, maybe into earnings, whenever earnings is for this guy down here. And I think that would do it. I think that would be extremely healthy for the stock. It's very unhealthy for a stock to just accumulate month after month after month, because that's when, we could bring up that chart of silver was a great example of that. Silver is still paying for the sins of 2010. And so,
yeah.
Go ahead.
If we brought up Apple, would it give us an idea of what a stock that's had a big run, then it has the sharp pullback but holds and then goes on another run? Because it went from 137 down to 103. And was there a reason why it would have stopped at 103 that made any sense? Because obviously that was the pullback to buy on Apple.
I think it was close enough to round number support at 100,
right.
That so many people put their buy orders in at 100 that it was a matter of front running those orders. I think people could see the supply and demand curve on that thing, and that was a matter of front running. There was no way this thing was going to drop under 100 again. Right. To me. Yeah. And this has turned into a good old classic cup with handle at this point, building the handle.
Especially as you go into that fourth quarter where people are going out and buying those watches and they're buying all their products for presents. And it's hard to step in front of that kind of demand. Next one up on the hit chart here is Airbnb, ABNB, which at one point in March didn't look like it could go public. And then, of course, as the winds of change happened, it was a real flyer. ABNB.
Is this the right ticker?
Yeah, ABNB.
Yeah, hard to get anything from this, and we don't have a SPAC that we can look at to get any past behavior on this one. So
yeah, it's a new offering, and
quite honestly, I mean, most of these, there's actually, I looked at this chart the other day, and it was a classic. Like that, what they did was they melded together all of these IPOs. Some of them were SPAC that went into IPO, and some were just the classic IPOs, but there's always this sort of like look to these things where they just get hammered and they have to build that base, and eventually then they start to, to work into something like that. So like if we went out to Snowflake.
Yeah, it's another good one.
Snowflake is, here's all the IPO stuff, and then bam, it's just getting hit. Right. So
here's another one that got whacked very hard recently. That was a good flyer. Shopify. I think it's SHOP, right? Yeah.
This seems pretty healthy to me. I mean, this is a great big pattern here. This is a big monthly flag pattern. This is beautiful, setting up this energy. And it's, again, I'm seeing this a lot of places where just this big consolidation, and it should manufacture an amazing move from there, and it's just not. I think we've had such a strong move that, I'd hate to say that we need more rest up here, because there's no shortage of money right now. It's not like 2008. 2008, we had no velocity. The spigots were dry. We don't have that problem right now. There's more money just sitting, looking for a home, looking for yield right now. And if we can't break from this, that is a little bit of concern as we get into the first of the year.
Yeah. Some people are saying if you can only get growth by sending out stimulus checks, that at some point could be problematic.
Yeah.
Next one up is for our gamblers, DraftKings, DKNG.
DraftKings.
There's a couple other ones that I'm watching. I'll throw those up after we do DraftKings.
Yeah, so this is another IPO, and this is one of the few IPOs that's actually added to, because it started at a reasonable price, right? Because this was a SPAC, and it wasn't a classic IPO that got inflated through, through a roadshow. We're going to bring this out at $200 a share. So it came out through a SPAC, which turned into an IPO, and then it's actually done well. So now what I'd be concerned about here is, let's watch this. This is kind of a nasty trend line here, but that could be a lower high sitting up on the weekly chart. So if that's a lower high, and everybody is thinking, let's just buy the pullback, what tends to happen on lower highs is they destroy people on the lower high. So I'd be really careful, especially if it undercuts 45 on this one. Now, no shortage. I mean, so this is all looking good, and they've already got past earnings and everything like that. But if this drops below 45, I would not be long.
Yeah. Yeah, because I think that setup is dangerous if you were to roll under 45.
Yes.
Let's look at a couple other ones. One is Penn Gaming, PENN. Since this person's into online gaming, let's give them a few other cards to look at.
Well, hard to argue with that.
Yeah.
That's it. See, that compared to some of the other ones that we looked at, which were like HSIC and IRM and stuff like that, you know, I'd rather trade something like this where it's just got a rhythm to it. It's just, you know, it does what it's supposed to do. It's just very linear. And charts that go into some type of corrective behavior are very nonlinear, very unpredictable, very, very difficult to get in the rhythm of, very hard to trade around with any kind of expectancy. So this one looks really good. It's just hitting exhaustion. So what I would expect to see here is that maybe for a few more days that we flag out here, maybe it's going to have to come back down and retest. So the faster that it comes back down to retest the breakout, the faster that this will recharge and get ready. Gotcha. Or if it just wants to go slowly to the side, that's fine as well too. But right now this one looks really good.
One last one is Churchill Downs, CHDN. And the interesting thing here is the 52-week high is 212. It hit 208 today, but it closed at 195. So has that begun its descent, or what do you think?
Well,
it's a pretty good reversal today.
That is that's your bearish engulfing.
Yeah.
Weekly candle.
Yep. Looks like double top a little bit too.
Yeah, it's a little bit of a lower high there and a lower low. So it's actually reversed. It's actually started the process of reversal on the daily chart, right? But just because it's reversing on the daily chart just means that more than likely we're going to have a pullback so far into maybe something like this area here, a pullback on the weekly chart. So this is, but that's definitely a reversal to a downtrend on the daily chart. So this is a good example of like something's got enough energy to break out. There's no shortage of breakout, but if it can't do that, that potential energy's got to go somewhere, and it's going to move to the downside.
This next one is called MP Materials.
Oh, I love that one. This is a former SPAC that was FVAC. So we did really well with this one when it was a SPAC, a special purpose acquisition company. So it is recently, and I don't know the exact date here, but it's not been long ago that this turned into it went IPO as MP. So we've traded this in and out several times because it's a battery company, right? Battery materials company. And that's the big thing, because to this point, the Chinese, listen to me, I'm Mr. Fundamentals now, right? But,
right? You know how to tell a story, right?
Right. No, but I'm excited about this one because in my mind, what I had heard up until recently was that our friends in China were really the single, you know, it was like single sourcing of all these what do you call these different types of metals that are used for all of these technologies, whether it's battery technologies or some of the semiconductors, you know, like they seem to have the only mines in the world for some of these things, but MP is starting to change that. At least that's the story I heard. So I love this one. It's a little ahead of itself. It's a weekly chart is toast right now. But what I've been doing with a lot of these guys is I've been very, very aggressively selling puts at pivot levels. And pivot levels I'm finding is former resistance becomes new support. So there's a pivot level at 25. There's a pivot level here roughly at about 28 or something like that. So it's going to explore some of these pivot levels because it's down in weekly exhaustion at this point. But I am trying to accumulate this, and I'm selling puts at relatively high levels, trying to lower my cost basis and aggressively trying to get assigned to this one. I will not chase it, but I can sell puts very aggressively to be rewarded for that. And the premium on these things is just,
I was going to say premium's got to be juicy.
Ridiculous premium on these things. So you can sell these things at, you know, look at this. I mean, at the 22.5 put, you can get paid $1.30 or so. And that's all the way down here. So you can get paid quite well to be obligated to buy this thing in a pullback.
And the volume has been very big in the last 50 days, almost 3 million shares a day versus 200 days, 1.8 million. So money has been flowing in. Today, obviously, everyone took a break, but you know, that's what happens when things go like this.
Some of these SPACs that are turning into IPOs have just been incredible. Like the QuantumScape, like now this is a big dog. So the last couple of days, everything is like sold off a little bit, just the hairy back is kicking in, but a lot of these things are like that. And I think somebody was talking about open in the chat room. So this is another one. This was IPOB. This was a SPAC called IPOB, which has become Open Door now as of the last week or two. And again, this one is really nice. I really like this trend that it's got going on here. Nice hammer today, hammering off this level. So again, great candidate for selling puts on, being very, very aggressive down below, you know, these pivot levels is been paying off really well for us lately.
This next one is tied into Bitcoin. So it's a Riot, R-I-O-T blockchain. And they just went over $1 billion of market cap. So that's a milestone. 22 million shares and change traded today. Went from 51 cents to 17. Not a bad ride, huh?
Wow. I got to look at the options on this thing here. So it's good that they have weekly options on here. So these are, so this is something, this is a classic stock that I would sell puts on below. Yeah. You know, I mean, when I have something happening like this where it's just running away, and you just want to ape into this, and I keep telling people, don't do that. Don't just buy into this. But, you know, either wait for the pullback or you can sell puts on something. You know, you can get paid to be, because the implied volatility on these is just so stupid.
It would have to be. Is it optionable? Let's see.
Oh, yeah, I just looked at this. So
okay.
It is massive. Look at this, you know, 198%, 194%. So you're just getting ridiculous, like, out to February, if you wanted to sell this thing at, geez, even at like $5 at the pivot here, at the $5 pivot, you could get, you know, well, there's not much there, but there's.
What about at 12? What about 12?
12, you're getting, you're making close to 20% return.
Yeah, 12, 10, and 8 would be three decent numbers to look at if the thing's for real, and it obviously looks like it could be.
Yeah, look at those beautiful pivots. So I like Riot a lot.
Yeah. But obviously, it's obviously on a frothy run, just like the Bitcoin was. And, you know, you don't know if things are going to take a break at some point. It looks like 18 looked like it got a little tired up there, but that could be taken out in 2 days if it wanted to, right?
Well, we do have weekly exhaustion here. So I would anticipate this thing flagging out for a few weeks, but I think the pullbacks will be excellent selling opportunities for premium. So somebody's asking on here if I have a version of Choppiness Index for MT4. No, I do not. But if it would help, I could send somebody the actual logic behind something like ThinkScript, which is pretty easy to read. It's not a C++ or anything like that. And a lot of people have been able to take the logic just from the ThinkScript and adapt it to things like NinjaTrader and so forth. So if anybody needs that, just reach me offline.
Do you have some different stocks or markets that we haven't touched on that you are obviously zeroed in on and going into the new year where you think there could be some significant potential?
Most of what we've been looking for, and this is something like Heinz is asking about, is like we've been looking at special purpose acquisition companies. We've been looking at SPACs. But one of the things that's been so difficult, I mean, if I've got like a stock and ETF watch list that I maintain, these are the largest 200 stocks that are out there. But if you look at the price of these things, generally these things are just 3 and 4 figure, and they're just so big. And even if you're doing spreads, they're going to be 250 wide. So it's just getting to be hard for somebody with a small account to get involved with trading and to get going with this stuff, let alone sell puts on something like that, which would be just, so the special purpose acquisition companies, the SPACs that we've been looking at. So a couple that I've talked about have like been FVAC turned into MP, and then there's, QuantumScape and Fiskars, and just a lot of these EV companies, very exciting companies that are out there in the space. Those are what we've been trading a lot of, and those are what we've been specializing in.
How about if we looked at a little bit, because somebody had mentioned a metal company. How about a couple of the different metal ones like PAAS for silver? Does that look like something could be going on there?
Yeah, it's a big weekly flag. So it's doing kind of the same thing that silver is doing itself. Obviously, it's so, can you time the breakout? We got a lot of energy here. We got enough. Now remember, silver itself is a little tired to the upside. So I would anticipate silver itself is going to flag out for a little while at the daily chart, but not too long. Maybe into the next week or two, that one might be ready to go again. So watch silver. But like we talked about before, nothing that silver and gold do seems to follow any kind of convention,
right,
or any kind of linearity. It just seems to go on its own timing.
Newmont Mining has a tremendous amount of gold that's coming into them each year. And in the 60s, are we looking at something that could very well get into the 80s or 90s with a
what's
NEM? NEM?
Oh, I remember this one. Yeah, kind of the same thing here. So
yeah.
What we're looking at here is just if we just go down to the last few years here, this is a nice monthly flag that's setting out. This one might take a little bit more to get out of there, and it's pretty sloppy over the last several months.
Right.
So, but once this one sloppy chart like this, what this means is that everybody gives up on it and just quits looking at it because they get bored with it, and then all of a sudden, next thing you know, boom, it's gone. So this is something where I would, like on Thinkorswim, I'd just do a right click and create an alert at this level and say, please send me an email when this thing breaks out. It takes 2 seconds to do something like that and just gets in the game if you're getting a breakout.
How about in the copper one that did great this year, but it's kind of probably going back and forth, Freeport McMoran, FCX?
Oh, I haven't looked at this one in years. Wow, no wonder I haven't looked at this in years.
Yeah.
So yeah, that's a nice recovery on the monthly chart. That's really good.
Mm-hmm.
So weekly, obviously, this is almost like the Russell 2000.
Mm-hmm.
Is like this just unbelievable weekly move, which is just, it's earned this right. It's been underwater for so long. It's just like jumping out like a whale. So I would not ape into this thing just yet. I would wait until it consolidates, flags out, maybe even hits 20. And then by that point, but look at the daily chart. Here's a great example of this. Daily chart just wound up tight like a drum, like a little high and tight flag, just an amazing amount of energy. But the parent time frame of the weekly is like, mom is still asleep and it's not going to go anywhere. So to me, this thing has to go down first. I could be totally wrong on this, but this is typically what I see is that when the child time frame is all wound up in the back seat and it wants to go somewhere and the parents are asleep, it's going to have to go down first.
There's another couple of stocks Bill Miller was talking about that he thought on a longer term basis had some great potential. DXC, which is DXC Technologies.
This one's tough to read because it's still in a primary weekly downtrend.
Okay.
So I typically don't touch anything if it's in a weekly downtrend like that. Yeah, it's got a golden cross, so everybody gets all excited
Right.
because the golden cross is on a daily chart. But what I'd want to see first on this thing, Jim, is I'd want to see this thing drop and give me 20.
Right.
You know, drop down here and put in a higher low and then pivot and
Yeah.
break into a higher high. That's what I'd want to see first before. I mean, you don't get any extra credit for getting, a bottom fill on these things.
Right. Right. But if it did make a turn, there's a lot of real estate above, huh?
Oh, yeah.
It reminds me of when I was involved with, my first bites at Freeport McMoRan underneath 10, simply under the idea that it's not going to go to 0 and I can hold it as long as I want.
Yeah, that's true.
There's two other ones that fall into that category that might be interesting. One is Teva, T-E-V-A, and they're like the generic drug company guys. And it's a similar kind of an idea, I think, in that once it gets going, it could be going, right?
Yeah, like this is like rolling around in the gutter trying to find,
Yeah.
valuable trash. This again, I buy stuff that's heading higher in price.
I got you. This is
So
more,
I mean, this is almost like in the crypto space. We moved in the crypto space for the last 3 years, and people, the price keeps dropping, and people are like, "Hey, man, I got a better price now," and it's like it can go to 0. So I buy stuff that's heading higher in price. From that, I'm a disciple of the Livermore school of
right.
stock pricing.
A body in motion will stay in motion. How about one last one on the cheap side, though, is Wells Fargo. Went down to like 22, 23. And obviously nobody likes this company anymore, but it's pretty much the same idea as the other ones, meaning it might have bottomed, it might be going someplace, but you're probably got a long time horizon to really see something go on.
I want to see the polarity go positive first. So for something like this, I want to see a higher low followed by a higher high.
Gotcha.
And that shows intent, that shows force.
Yeah.
And that shows that you're getting the bears on the heels.
So you got the first move up, you got to pull back, see how that goes. And then on the next one up, if you can go through that number, then maybe you're onto something.
Yeah. Yeah. That's your old classic 1, 2, 3 pattern.
Yeah.
Right.
Yeah. When I look at Bitcoin, I look at GBTC simply because obviously it's traded on the exchange. The volume today, 16 million shares. So, it is something, that you can kind of follow a little bit easier than wallets and everything else. What do you think of GBTC?
No, it has no option, so I would never trade it.
Yeah, that's the problem. That's the problem.
Yeah, trading Bitcoin itself is not that difficult to do on a spot or even an indexed or derivative basis. So yeah, until something like this has options, I won't trade anything that doesn't have options because
Right.
as do most institutions won't trade anything that doesn't have options because they can't risk manage it.
Right. I mean, they can't afford to get in there at 33 and have it go to 13 for whatever reason.
Right.
Yeah. And so one of the things you do bring to the table is you can explain fully how to participate in Bitcoin without using this kind of thing in a more direct fashion.
Yeah, absolutely. So,
because I'm not that certain about it, and I'm certainly not in a party of one. So it would be helpful to get the facts and the figures on how to do it directly.
Yeah, I would say, like, if anybody is interested in joining what we do, I would go out to elite.readyset.trade, and you can join us for free out there. So just join our community out there. It doesn't cost you anything. We publish watch lists. So like Heinz was asking about watch lists for SPACs. We post those in there all the time. We'll put out the trade of the day in there as well too. So we do a lot of stuff for free people. We're just trying to build a community that's out there to get people, towards the process of being able to trade for a living and earn their fair share.
Great. One last chart, if we could, before we sign off, and then of course we'll go over the contact information again. The dollar index. The whole world is negative on the dollar. Is there anything out there that would tell you that they are beating a dead horse here, or is there more blood to take out of the dollar?
Dollar is in, well, It's in a weekly downtrend right now, and it's almost about to, I mean, it's in a monthly consolidation, which is, it's making lower highs but higher lows. So it's in a trendless condition on the monthly, but weekly is really bad right now because we just keep debasing things. So
Right.
as long as we keep debasing the currency, the dollar is going to go lower. And if the dollar starts to go higher, it's going to crush the equities market.
Right. Because again, the dollar peaked in March at 104 and it went all the way down here to 90. And it's not coincidental that the stock markets had a good time during that period.
Yeah, and I think there's going to be political pressure, not only from an export perspective, but also just from an equity market perspective to keep it moving in that direction.
Yeah.
For better, for worse.
Exactly.
Buy
Well,
Bitcoin.
let's give these guys again your contact information. And if there's any special offers you want to extend, this would be a great time to do it, Doc.
Yeah, again, you can reach me out at ReadySet.trade. So doc at ReadySet.trade. Or again, just join us here at the elite.readyset.trade site, which looks like David's got that posted into the chat room here. And again, it's for free. You know, we're not going to bombard you with spam or anything like that. We are going to keep it clean and valuable for that. We have a great community in there, so we're looking for people to join us.
Okay, that's great. Everybody should take advantage of that, get the information and see what they can do with it. And then, of course, while you're in there, you'll hear all the other services that Doc brings to the table. As far as Option Professor is concerned that we run, we have a weekly market update that is free of charge to receive. You simply go to option, O-P-T-I-O-N, professor.com. And you can get your email in there. And then every week you get the free market update, which we cover everything from stocks to bonds to current events to the dollar and, of course, the metals and the energy and the softs, which have had a pretty good time. So a lot of information there, and it's free of charge by just putting your email in. David, I'm going to turn it back over to you. Doc, it was a great conversation. I think we brought a lot of information to the people, so I hope everyone enjoyed it. And then,
yeah, thanks, Jim. It was nice to meet you.
Yeah, we'll do it again soon. Thanks a lot, Doc.
Okay, see you guys, and I'm going to stop sharing my screen and back to David.
All right, thanks, guys. Lots of good info covered for the last Timing Research show of the year. And so we have lots more great events planned for next year, but we had a good 2020 for these Timing Research events. So anyway, just a reminder to everyone, be sure to subscribe to Timing Research so you can get updates on the future events. And you can do that on Timing Research or your favorite podcast directory. And you can also always go to TimingResearch.com to get access to the this event as soon as I can get the recording posted, or any of the past shows and events there. So I just want to thank my guests again for today, Doc Severson over at ReadySet.trade, and the Option Professor at OptionProfessor.com. Thanks, everyone.